You have recently done a survey of investors, and you are picking up on some bearishness cropping up. And I'm not sure how to interpret that, because on the one hand, bearishness might imply that there could be pressure to go lower. On the other hand, it might imply, well, that's healthy. After the kind of run that we've had, you would expect to see somebody looking to sell if there's going to be balance. How do you interpret it?
Yeah, so it's a great question, something we spent a lot of time talking about this morning. If you go back to our March survey, what we saw was that the level of bullishness on the stock market was one of the highest readings we've had in the history of our survey. And what that told us back then was that things were scary in terms of the fundamentals and the news flow, but investors thought valuations were cheap, and they sort of knew inherently that this was, that point in time was the right time to buy the market. So they stepped in to help contribute to the rally. Now what we see, it's not that everybody is bearish, it's that the bearishness is starting to pick up from where we were last quarter, and the bulls have fallen back down pretty sharply. Now, what is extreme in our survey is the percent who say valuations are expensive, and that actually hit a new survey high. What that's telling me is that as the tape weakens here, the news flow deteriorates. I'm talking to institutional investors that are really not inclined to step in and support this market the way they were back in March. So I take it as a bearish read, less about the level and more about the shift in sentiment that we're starting to see and the reasons for the shift in that sentiment.
Okay. James McDonald, Hercules Investments CEO and CIO. Want to get to you now. There are a number of tech stocks you have your eye on, including Facebook, Netflix, Amazon, and some, we could call them challengers coming up in some of these categories. Roku, Shopify, which is a stock that I love to watch. What do you see happening here? Is this bearishness going to affect everybody equally, or some more than others?
It's important to understand where we are. Obviously, we got to this point. We're even talking about a market going down based on COVID. And if you look what's happening, gold is at an 8-year high, new high today. We've seen only 2.3 million cases in the U.S. That's 7% of the population. And Dr. Fauci suggests that over 40% of people who have it might not show symptoms and might not transmit. This market is going to come down. COVID is going to stay around. We're not going to see any vaccine until late 2020, early 2021. And so valuations are going to come down on the former winners. And the FANGs were great. If you own a FANG, if you own any of those companies, you're happy. If someone hires me today, I've got to make money from them going forward, not what happened in the past. And so we've got new FANGs. There's a new Amazon in Africa. It's called Jumia. There's a new Amazon in Latin America called Mercado Libre. These companies are at the cusp of where Amazon was 7-8 years ago. And we have this double effect where the COVID situation has halted economies, and we can get these companies at great discounts. Obviously, when you're talking about Africa and Latin America, you're talking about populations that are a little bit behind us in terms of their adoption of technologies. Great buys there in terms of the new Amazon. In terms of what's coming in the future for here in the U.S., we love American Tower. Everything that's transmitted by data is going to come into 5G. 5G is going to be the monster in the tech space, and we love American Tower because they've got a $28 billion guaranteed contract inflow from companies like AT&T, Verizon, T-Mobile. That's a great one. We talk about Google being a monster. Google had its first decline in growth in ad sales for the first time in 10 years. We like the next Google is Trade Desk. It's a digital ad monster. It's got the best artificial intelligence out there. We're looking at a 37% CAGR for advertising revenue over the next 5 years. That's got 5x growth to $2 trillion. We think Trade Desk is going to own that. That's our next Google. Shopify is a great company, as you mentioned. All of these unemployment numbers, these are real people. These people are going to have to go find new income, and small business has always been the engine of America. So we like Square as a point of sale monster for those people. We like Shopify as a set up your business. And then also, in my old days, it's funny to talk about technology. I used to watch television when there was no streaming, right? And you saw commercials. We've gotten so spoiled with streaming, but incomes are coming down. And so this streaming concept is going to stay, but we like Roku for going back to free TV, right? If you can stream content and get it free, Roku, we like Roku to pick up revenue there. And then in China, we like Momo. We all need love. And frankly, Tinder and Match.com drove IEC's stock price here in America, and we think Momo is going to be the next Tinder, the next Match.com for China. And so if someone hires me today, I can't really put them in the FANGs. We're at all-time highs on those companies. They're great businesses, so we have to look ahead to what the next things are, and that's our list.
It's a nice assortment of choices and candidates right there for names to watch. Hey, Lori, we got to give you some credit because you've had some healthy skepticism about the rally for the last actually several quarters. But it's not like this volatility that we're witnessing today was not unexpected. I mean, people have been talking about rebalancing at month end. To what degree do you expect investors to be there to catch a dip if we have a reasonable drawdown?
Well, I think what we're seeing on the tape today is a lot of the things we figured out in the survey that investors are worried about are coming to fruition. So, we asked investors, what are things that you're worried about? What are things that could potentially take this market down? A rise in new cases, frankly, a second wave of the coronavirus. We are getting very bad news there. And that was something our survey participants told us would make them grow more cautious on the market. 2020 election concerns. There's been some interesting polling data that's come out today that I think is spooking the market a little bit. I think that the problem is that in a period of excessive valuations, you don't give the market the benefit of the doubt, and you're vulnerable to bad news flow in the tape. And we're seeing the, sort of investors' worst fears come to fruition today. So, we did see in the survey is that most of our survey respondents think you'll see a 10% correction at some point in 2020. A lot of disagreement as to exactly when it would happen. But bottom line, people were braced for this. It's hard to really see the institutional community stepping in here and supporting the market.
James, finally, how do you protect yourself against that potential downside?
We love the situation because finally markets are making sense. We've seen this market rally off the bottom. IMF has just downgraded global GDP by 40%. It's 4.9% contraction. We haven't seen anything like that in any crisis before. And so it makes sense the market comes down. We're doing short and long dated put options on the NASDAQ 100 and the Russell 2000. We are identifying those sectors going to have weakness. And so with about 5 or 10% allocation in a growth portfolio to put options, we offset any losses on our upside. We love this situation. Finally, markets are making sense, and we're excited for our put options.